everybody. This is Susan. Today we have Casey Chafin here from Chafin Credit Consulting, and we're going to be talking about credit repair and restoration. We're going to talk about the scripts to use when you're meeting with your buyer to try to help counsel them and let them know that there are possibilities for making credit corrections, and let them know that there is a resource out there to help advise them as to how to do that. So Casey, welcome, and we're glad to have you here.
Thank you very much. It's nice to be here. So as far as credit goes, there's so much information that you can find everywhere online, and a lot of it is simply not true. So one of the best ways to think about credit is it's like the American dream. So the American dream is a house, a car, 2.5 kids, right? For credit, to get your scores 800, exactly, you want to show a mortgage, a car loan, and 2 to 3 open, active, revolving accounts with high limits, all right? So that's the easiest way to think about it. So when people come to you and they say, oh, I have no credit, or my credit is low and I don't know why, well, you can ask them about the American dream and if they actually hit that with their credit yet. There are also a lot of misunderstandings about credit just to cover right now. So a lot of the commercials you see on TV say you can get 1 report a year. That's not true. You can have it pulled every single day. There's no negative impact and it shouldn't cost you anything. The other misunderstanding are the companies that advertise on TV and they say, oh, get your free credit score here, like Credit Karma. Those aren't legitimate in any way. Credit Karma is not legitimate whatsoever. So any company that is providing or selling you a credit score is a scam. Real scores are called FICO scores, which are calculated by the Fair Isaac Corporation. So what's going to happen is your clients will say, well, I just got my credit score, in which case tell them they need to go get a real one, which you can also, a FICO score, which you can get for free. They'll say, I got my Vantage score, which is better than a credit score, but it's still an educated guess. And then FICO scores, which are somewhat legitimate. Now, here's where it gets a bit confusing. The Fair Isaac Corporation was actually bought out by a third party. So a consumer has no real way to get a real score before being pulled by a lender. The best options are through their banks, which should automatically be providing free FICO scores from at least one bureau. Most do. And it's just a matter of signing up. And there's no negative impact for a consumer to track that way. Or credit card companies like Discover or Capital One. They offer free FICO scores, and they're usually 10, 20 points plus or minus. So if you get a client who comes to you and says, hey, I have 700 scores, Credit Karma told me so, take it with a grain of salt and advise them to actually look into it further. And as far as what you guys are going to experience a lot, what a lot of lenders and agents have been experiencing is the millennial who comes to you and says, I have student loan debt. I can't afford a house at all. I can't buy a house. I have $150,000 in student loan debt, whatever the case may be. What you need to advise them on is that is not actually a preventative in any way for getting a home. When your DTI, which is your debt to income, is calculated, when it comes to student loans, mortgages, and car loans, they don't care how much you owe. They care what your monthly payment is. So as long as your monthly payment is affordable and a certain percentage or less, you can have a home. So when the college student says, I have $200,000 in student loan debt, I can't buy a home because then I'm going to have a $200,000 mortgage, you can explain to them the overall amount of debt should not dictate your life and how you live it and where you live. What should dictate your life is whether you are financially stable on a daily basis. Can that make sense? Okay. There's also the difference between good debt and bad debt. So mortgages, student loans, car loans are all good debt. They make you, as far as credit goes, reliable and trustworthy, and people want to see it for employment or wherever you go in life, if you're switching jobs and your credit's going to be pulled, they want to see you own a house and a car and you went to school. So those are all good things. Bad debt is credit card debt and personal loans. So again, just using the millennials as an example, they will say, oh, I have a bunch of credit cards, but when their credit's pulled, it's like, well, you went to Macy's and Home Depot and Lowe's and Victoria's Secret and you applied for a credit card. And while the millennial is thinking, oh, I got 20% off, this is great, what they don't realize is that to a lender, it appears to them that they didn't have enough money to make their purchase in the store. They also don't think about the interest rates, which are usually 28%, so it costs more in the long run. So just tell your client, keep it simple. If you're looking to build your credit, you can start with secured credit cards, which are guaranteed approval. Because a lot of people will come and say, especially people who have just moved here from a different country, just graduated from college, they'll say, I have nothing. I have no credit at all. I can't get approved for anything. And that's because it's a circular argument. To get credit, you have to have it. But a secured credit card, you give a deposit of $100, $200. They give you a credit card. You use it correctly, and you get your money back. And that's the easiest way in 30 days to get into the 600s. The other thing that's looked at, which I'm sure you guys went over a little bit before, is the balance to limit ratios. So here's a way to think about it. Let's say your client has maxed out their cards, and they say to you, well, I max it out, but I pay it each month. That doesn't matter when it comes to credit. So using Capital One as an example, they could update on the 21st of the month. So your client's thinking, well, I have access to $2,000, I used it, but I'm going to pay it off on the 30th. If Capital One updates on the 21st and they get their credit pulled, they are completely maxed out and they're showing access to nothing. They're looking like a really bad investment. So when you come across someone who says, I max out my cards, but I pay them, I'm a good person. Yeah, you are a good person, but play the game a little bit. So before you go to get a house, before you have your credit pulled, play that game and keep your balance to limits at a certain ratio. If they use more than 100% of their allotted limits, it's usually an automatic denial, no matter what the scores are, because the red flags are so high with the lenders. More than 90% is bad. It's usually 10-20 point hit per account. So if you max out 3 cards, you're looking at a 30-point drop in scores. 50% is still considered bad. Most lenders will tell you 30% is good for scoring. Your FICO scores and the actual calculations when it goes in the system. 8% is magic. That will get you the highest scores possible. Now, what you don't want to tell your clients if they ever ask you is pay it off. Pay off your credit card debt. Get everything zeroed out. And here's what happens. Using Capital One as an example, if you owe Capital One money and you pay it off, it's automatically flagged in their system that you're at zero, and they do a quick evaluation of you for any credit card company. And if they think that you're risky in any way, they can lower your limit and they can close the card. They don't need your permission to do either. So you've gone from having access to thousands of dollars to having access to nothing, which
because you paid it off.
Scores. Exactly. So you're doing a good thing. It lowers your DTI, but it's a risk you don't want to take. So you can leave $2 on the card, and they can't close it. And so you kind of eliminate that risk. Make sense? Okay.
I was going to ask that.
Yeah. And then there are inquiries. So clients are allowed to apply for 6 things in 2 years. After that, they're red flagged. So you gave the example earlier of your friend going to an auto dealership and applying. What auto dealerships do is they shop credit. So they can do 5 to 20 pulls in a 24-hour period, which means you're past that 6 point, you're red flagged, you can be automatically denied no matter what your scores. And that stays on your record for 2 years. So you're basically out of luck for a full 2-year period.
How many credit cards you could have open and not affect your credit score?
So you can have multiple cards open. I wouldn't go over 10, but what you want to show on your credit before applying for something is only 2 to 3 are active.
Okay.
So you don't want to show that you use 10 cards on a daily basis. You want to use 2 or 3.
2 or 3 that are active, but you could have a credit card that you have not used.
Yeah, so like Care
they
Credit,
won't-
which is for medical. You
Okay.
can have that card as a backup just in case you need some sort of medical procedure, but you don't want to show that you're using it every day. So cards that you do use every day shouldn't be retail either. It shouldn't be Macy's or Home Depot or Lowe's unless you're a contractor or you're a supplier of some kind. The cards you want to show you use every day are the bigger banks or smaller credit unions. So credit unions usually will give their customer a credit card that's 2 to 2.5 times their monthly income with an 8 to 9% interest rate, which is great. It becomes your either everyday use card or your emergency, I have to replace the furnace and I don't want to pay a crazy amount each month. The bigger banks and the bigger credit card companies like Santander or Capital One or Discover, they offer 18 to 24% interest on average. So you're paying hundreds of dollars in interest. Yeah.
So if you want to close one of those cards, because that's the one I have, do you get rated as well if you close them?
Yes. So you'll be punished. So here's how you want to play that. Pay it off. It'll close itself in 1.5 to 2 years unless you're red flagged, which you shouldn't be. But it's a risk you can take. And just let it sit. And it will continue to report positive to your credit every single month.
Until it self-closes.
Until it self-closes.
So if it self-closes and I don't get red flagged, I'm okay.
Yes.
But if I get red flagged,
If you get red flagged, it's a risk you're going to take because you're not going to use the card again anyway. And in
I
that
want
time
to.
period, you want a different card. Something that actually benefits you, something with a lower interest rate. So a local credit union like IC or DCU or LCU, they all offer great rates. And usually with those credit unions too, if you have a card with them or a bank account, it automatically turns into pre-approvals for car loans at 2 to 4% interest versus a dealership, which is anywhere between, on average, 6 to 14. So,
thank you.
yeah.
I closed my card from DCU a long time ago because I got mad. I had money in my savings, and I think I used the credit card somehow, and it went over the limit. But I was expecting them to get money from my savings, and they charged on the card like overdraft, whatever, and were charging me that. And I said, I have a lot of money in my, in the same accounts that, and why did you choose to let me go over, over whatever the limit,
Yeah.
when I have, I had a lot of, before I bought my first house, I had money, and so I just went and, I fought with them and I said, you pay it off and I canceled it right there.
Yeah.
I know that was a long time ago.
Most of the companies like that, especially DCU or ICU, they won't dip into one pot to pay for another one unless you specifically request it. So you would have had to
You understand what I mean? So I had money, and then they still use
What she's saying.
Listen to what she just said.
Listen to what she said.
So if with a certain company you have a savings account, a checking account, a money market, 2 credit cards, and a car loan, and you are late on paying your credit card, they won't go into any of your bank accounts. If you're late on paying your car loan, they still won't go into any of your bank accounts because they're all different accounts and they're linked to you but not to each other. All right. So when your client goes to the lender and gets a credit pull, the lender pulls what's called a tri-merge, which is a combination of all 3 credit bureaus, Equifax, Experian, TransUnion. A tri-merge most people can't read it. It's like reading a different language. They're not sure what they're looking at, so they put it into the computer system, and the computer pops out and says, all right, they're approved or not approved, or it does a rapid rescore, which is your client can get this many points if they do this, this, and this. Now, those are great, but what they don't take into account are they only look at federal regulations and options. They don't look at state. And Massachusetts is one of the best states you can live in as a consumer. We have the most protection laws. So what I did is I printed out quick fix options. So this is what you can kind of look at to talk to your clients if they present a problem. So if your client comes to you and they say, you know, my scores are 640, I'd really like a 680, and I need to figure out how to get up there, what you can do is you can say, okay, let's take a look. And the first thing to look at, so these are, again, difficult to read, but basically a tri-merge, what the lender pulls is going to have 4 to 5 pages on average of accounts listed like this, okay? So it'll have the name of the account, when it was opened, when it was last reported. You want to look at the bottom where it says limit, and on the end where it says balance. So one of the first things you can look at to boost scores in 30 days is the balance to limit ratio. So you can see that this guy, or girl, whomever they are, has a balance of 6,600, limit of 7,200. So you can say to them, well, you know, you could pay that down. If you can pay that down under 50%, you'll get a 10-point boost by next month. So that gets them a little closer to their goal. You can also tell them, well, look at your inactive accounts. So like you were stating, if I close my card and it closes out due to inactivity, you actually do have the option to reopen it without a hard inquiry. So in this guy's case, they had a Barclays account. It is closed due to inactivity. You can see that in the notations at the bottom. And you can see it was last reported October 2016. So this guy can call Barclays. He can say, I want to reactivate, I lost my card, can you issue me a new one? And if Barclays says yes, which the majority of the time they do, this guy's immediately going to get 2 years of positive credit history added, which is on average a 20-point boost or more, plus now showing access to another $2,000. So their scores boost way up, and there's no hard inquiry, so there's no negative impact. The worst thing that could happen is Barclays says we'd have to re-pull credit or no, in which case it was worth a 5-minute phone call just to find out. All right, if you flip that over to the back side, the next thing you can do is, in a lot of instances, and again, the automated system doesn't process this, it doesn't look for it, so you can tell your client, are the accounts being updated? So for this guy, he has an auto loan with American Honda Finance, and they forgot about him last year. So every single month he's been paying on his loan, but Honda forgot to update the bureaus. So he's missing a 1.5 years of positive history. His balance is higher as well. So all he has to do is call Honda and say, fix it. And he can demand this take place in 72 hours. So when there is an inaccuracy or a failure to update on the creditor's part, it's actually a federal violation, and it's a $1,000 fine, which don't tell your clients that because they're not getting $1,000. It's not going to happen, but they do have the right to demand an immediate fix. All right, and last, well, not the last, but the most effective thing they can do. So you have a couple coming in to purchase a home, or friends, or just 2 people who are going to purchase a home. And their scores are both a little bit lower. So say 620, right? John says I'm a 620, Jane says I'm a 620. We really want an FHA, which requires a 640. You can say, okay, well, Jane, do you have any credit cards? And she can say, hey, I have Macy's and Home Depot. And John says, I have Lowe's and Victoria's Secret. What they can do, well, you know what I mean. So what they can do is they can add each other to their accounts as authorized users. All right, it's called piggybacking. So Jane adds John to her Home Depot account, right? And Home Depot, she's had it for 2 years. There's a $5,000 limit, and there's no balance. So it's a great account. When she adds John, he's going to get the entire history from day one. So when he's added as an authorized user, he immediately gets access to $5,000. He immediately gets the whole timeline associated. So he can see a point boost, 20, 30, 40, 50 points, just by showing that. And a lot of people, not a lot, but around 50% get nervous because they say, well, I don't want this guy on my accounts, you know, or whatever the case may be. And you can explain to them, well, first of all, you can put a password on the account. Second of all, you can cut up the card when it comes in the mail. And third, after you get your house, take them off. You can take them right off. But that's the difference between
But remember to do
620.
that.
Yeah.
Oh my gosh.
That's the difference between a 620, a 640, or a 680. So that's, depending on the price of the home, tens of thousands of dollars over the next 30 years by a quick phone call that doesn't cost anybody anything, and there's no inquiry. With me so far?
Dolores is speechless.
I
Okay.
am getting all kinds of excited.
The only regulation with that is that they have to be either living together in the new house or buying it together. So I can't go to a friend of mine who lives in California and say, hey, I made your accounts to get a house.
Now, yeah, so specify that. They can't move in tonight. I mean, they have to have something with the address, like a utility bill with the address of the property, or?
I just mean that they have to prove to the lender they'll be living together.
They have the same dwelling.
So if they're buying 10 Main Street, they have to either be on the mortgage together or one of them there's zero balance. All right, so they both get the point boost. Now the one below are two different accounts. So you can see with the letters there's a C and a J, but they're not together at any point. So neither of them is benefiting from the other. Does that make sense? So that's one of the easiest, quickest things that you can possibly do to help your clients boost their scores quickly with no risk whatsoever. And it's just a loophole in Mass state law that they can tap into. All right. Okay, and there's one more page. So every once in a while you're going to get an individual who says, well, I didn't pay this bill, and it's on my credit. So there are two types of situations there. There is the account that's with the original creditor, so the original company who gave them the funds. In that case, you do need to pay it 90% of the time. So they do need to call that company. They do need to settle it. They don't have to pay in full. You don't get extra points for paying everything versus settling an account. But you cannot, if you have an account in default over $1,000, odds are you're not getting a mortgage. So if they come to you like this guy and says, hey, I have a repossession for $4,300, do I have to pay it? Well, yes, you do. You either have to pay and settle it, or you can do a monthly payment plan, and as long as you show you've paid for at least 3 months, you can have a house. Now here's the switch with that where things get interesting, and I am a little credit nerdy, so exciting on my part. Here's where Massachusetts comes in that's so different. All right, and this isn't on the paperwork.
Okay.
So every state has certain regulations when it comes to credit, and as I said, Massachusetts is one of the best, and the reason being that we have a law which says collections may not be reported on a consumer credit report in the state. So any account that has been sold to someone else, which happens all the time, we see collections all the time, is not reporting legally. What that means is your client does not have to pay it, and in fact, they can use those violations to have the accounts removed, which is, if you pay something on your report, it zeroes it out, but it's admission of guilt. So it stays on your report. If you can get the account removed, it's a higher point boost. So for example, Alright, so with this person, and again, this is why being able to read a report comes in handy. So look at Sprint, alright, it's the second one. If you look to the right of it, you see collection. Now, Sprint doesn't actually report to the bureaus. This is a debt collector reporting, which means this $771, they don't legally have to pay it. It can be removed from record without them paying anything. Same thing with Progressive. Utility, insurance, cell phone providers, they don't actually report to the bureaus with the exception of National Grid and Verizon. So Progressive, you see to the right, collection, and you see the balance. This one can be removed as well without them paying for it. Below, you see 2 medical accounts. It is completely illegal to report medical in this state whatsoever. Those can be removed as well without them paying it. So this is all money your client can keep in their pocket to put towards a home. It also makes them love you because you just saved them over $1,000 by saying, hey, there's this law which says they can't do that. So in a situation like that, they have options. They can either call me, and my job is to argue for the removal of the account and wiping out of the debt, which most people opt for because I'm not going to try to fix my car on my own. I will screw it up or say the wrong thing or do the wrong thing and have the wrong tool and waste time. If the account is over $150, you'll save time and money by calling a company like mine versus trying to call them and say, well, I think there's a law that says this, and then they talk over around and it gets confusing and overwhelming. So, and collections are at least on 50 to 60% of credit reports right now, just because everybody's made some sort of mistake, even for getting a copay at the doctor for $10. I've seen collections as low as $4. But when a collection is added to a credit report, it can be a significant hit on scoring. It decreases as it gets older, but it's still something that if you can fix it, make it go away. Any questions about that?
Well, again, the fixing, either for ourselves or for clients, the big thing is they never know where to start.
Yes. So when you get a client that says that, I have no idea where to start, you say, okay, well, give Casey a call. So the first...
Or which is more important than the other to even address. That's really...
Yeah, so you definitely want your client to kind of have a to-do list with a timeline, even if they want to tackle it on their own. They don't want to put funds to the wrong place or harm things further. So with a company like mine, the first step is a consultation, which is they provide their information. I do a soft pull onto the report so there's no negative impact, no risk, not on their record. And I'll be able to provide them a written analysis.
So saying, 2 things about that. I'm feeling vibes from Dolores.
Okay.
Are you willing to travel to meet people?
I do, yeah. Okay. So my business is travel-based.
Okay, and have you done things like, I'm thinking of something like the first-time buyer webinars.
Yes.
At a credit counseling webinar that we hold somewhere with. I think
I'm happy to provide information and advice, and the issue with credit, even if you learn it and take a class in high school, you learn the very basics, and there's no way to actually receive an education unless it's Google or Credit Karma, which is...
And you know, from an agent's standpoint, when you are building your database, this is, I wish I could think of the quote perfectly. The work the work that you do today is building your client database for 6 months from now. Got it? The work you do today is building your client base for 6 months from now. So the people that you help that aren't going to buy 30 days from now, but are going to buy 6 months in a year, you're building your clients.
I have a few clients for you.
All right.
So that's great. That's great. I think this is going to be so helpful. And I think most of all, I mean, I don't mean to romanticize the whole thing, but I do think that it can give hope to people that thought there wasn't.
Absolutely.
And had no idea how to even begin to go about this.
I get certain types of calls every day. I get, this is going to be the worst case you've ever seen. It's likely not the worst I've seen in the last hour.
Yeah.
I've seen some doozies, but the average case is 6 months or less, again, unless there's a bankruptcy or you've paid late on your mortgage.
But I think the other thing that you pointed out, and that's where they wouldn't ever have the understanding, is which ones are the important ones to address that'll change your credit score more quickly. That's amazing.
Amazing. Now it's like a box of Pandora.
Okay.
All right. So one of the issues your clients are going to probably encounter is, well, the credit bureau is saying this, and it's not true. It's not the credit bureau. It's the creditor. So if Experian is saying, hey, you didn't pay Discover last month, it's not Experian saying it. It is Discover who's reporting the information. So people say, oh, I'm going to fix it myself. And they go online and they dispute everything. Now, what's going to happen is maybe 10% of the time they get lucky and it simply times out, because the creditor themselves has 30 days to answer. If they don't answer in 30 days, it's removed. But if you submit a dispute and the creditor comes back and says, no, we're right, you failed. You gave admission of guilt, and at the very worst, it's fraud because you lied.
Oh, see, that's an interesting...
So there's no like policing of it right now, but if you have a client who says, I'm just going to go on and say I didn't pay late, then...
So there's 2 points to that. One is they shouldn't do it to begin with. They shouldn't try themselves to begin with because they really don't know how to go about it. Second of all, they may be causing more harm than good.
Absolutely.
Oh, my goodness.
So if there's a late payment on a car loan from 3 years ago, and they go on and say, well, I don't really think I paid late, so I'm going to dispute it, and they do, they fail, it reactivates the whole account. So if they paid that account off years ago, they now have
Don't the creditors enjoy that too?
I don't know if they enjoy it.
Well, they all, okay. I know somebody that, make the story short, anyways, defaulted in a car.
Okay.
And it's about $7,000. And they took the car, but, and I also still owe
Okay.
the $7,000. So how does that person goes about that?
So in a situation with repossessions, it's a little bit different. So I'm going to condense it really fast, and then we can go over it in detail at a later point. So again, Massachusetts has different regulations. So as an example, let's say Honda says, hey, you owe us $7,000. What needs to be looked into was it voluntary or involuntary? Did you literally take the car and put it on the lot? If you did, you do not have to pay some of the charges. If they came and picked it up, if they said, oh, we'll meet you at the Walmart parking lot, that's considered involuntary, and they don't tell you that. So you have to pay more. There are certain laws that need to be followed by the repossessor, so they have to send what's called a notice to cure, which is an option to buy back the car. If they don't send that, I think it's required to be sent once a month for 3 months, then it's a federal violation, a Mass state violation, and you can use that to your advantage.
This is why she has to be your best friend.
And one of the number one regulations in Massachusetts, which people don't know about, so normally when a car is repossessed, the loan holder takes it and puts it in auction. because that's the simplest, easiest way to go about it. But Massachusetts has a law which says legally they are required to attempt full fair market value. You can't just put it in auction. So if they come to you and say, hey, we sold it for $3,000, you now owe us the difference of $4,000, you can say, well, I want proof that you attempted. You put it on a lot, you put it online, you tried to get full market value for it. And if they can't prove that, then you can use that again to your advantage to get the balance down. You can also, consumers have the right at any point to say to someone, prove it. So, yeah, if I say to you, hey, you owe me $10,000, I bought this debt, or you had this with me, or whatever the case may be, you can say, okay, prove it. I want to see my signature. I want to see a ledger, a balance, a detailed breakdown to the penny of every single thing that went on. I want to see the original contract showing I agreed to all these charges. And once that formal request is received, in writing, certified, because they can just pretend to have never received it, they have 5 days to get you everything. I've seen that happen once over the past decade. And if they don't get you everything, again, you use it to your advantage. It is possible to wipe it out completely. You're looking at a 6, 8, 12-month fight. Sometimes it's worth it, sometimes it's not. But you should always know your rights. Just because someone says you owe me money doesn't mean you do at any point. So yeah, repossessions, there's a lot of laws. And a lot of different things you can use to your advantage, but you also have to value your time.
So
Is it worth it?
to protectively ask the question on behalf of some people in this room, about people who English is the second language of. So if you were to try to call these places yourself, do they have people, is there a press 1 or press 2 if you only speak Spanish, or?
They should usually have something, especially if it's a corporation that
Because
reports to the
sometimes
bureaus.
that understanding can be blurred. So
You can also have your own translator on the phone with you.
right, so
Speakerphone.
so let's fast forward. So even if you were going to do whatever we do, a gathering with Kiki and Dolores or whatever, to have them there to help with the understanding, they could do that as well. As in every class that we've been teaching, sometimes it's just the terminology that they don't even understand.
Yeah.
So
it's difficult in a lot of instances to keep up with.
Yeah.
And you can definitely have someone on your side. The one thing I wouldn't suggest is you'll have people who come to you who say, I need debt consolidation. I, on a personal level, am not a fan of those companies. So what they do is, say you have $10,000 in debt, they're going to sit on it until you default completely and it goes into collections, at which point your credit is far worse off. And then they're going to call maybe the original creditors while you've been building up a bank account with them. So you pay them every single month a certain amount, and they're going to call the original creditors and call you and say, hey, we settled, you have to pay it. But they can settle for whatever they want. They can settle for 95%. Whereas you can make that phone call even if you're not confrontational, you don't like negotiating, you don't like doing it. I have an 85-year-old client who's fantastic at it. You can call and say, hey, I owe you some money. What can we do? You don't have to throw out a number first. And they'll say, oh, well, you owe us $4,000 right now, we'll settle for $3,000. And you can come back and say, well, I've got $800 in the bank. Can we do that today and call it done? Absolutely. It's always personal, too. So if you get someone on the phone who's having a bad day, who doesn't know their job, who's been there 24 hours working on commission, they're going to ask you for as much as possible and tell you there's no other option.
If they take the 800 though, how do you know that does wipe out that obligation?
So you do want to get it in writing first. They can send you an email. If they don't want to send it in writing, you can say, well, it's a recorded line, right? So as long as it's being recorded, and electronic recordings are required on file for a 2-year period. And going, not to skip around, but going back to things like repossessions, So legally, in this state, a creditor has to maintain records for 2 years in office, right? So if you lend someone money, you have to maintain the records for 2 years in office, then you can put it somewhere else. So when you go to them and you say, if the account is more than 2 years old, and you say, prove it, and they have the 5-day period, they have to go find it. So if it's more than 2 years old, which most are, especially coming for loans, they have to go in the basement, they have to track down the paperwork, because odds are you actually signed something in person, and they have to find all of that. So that works to the consumer's advantage as well. They have to provide every single piece of paper. Okay, so yeah, that was a lot of information on one thing. So where I was before was disputing. Don't do it unless you are 100% sure, and in most instances you're not. So don't go on to a credit report and say, not mine. Because if it's not yours, you should have filed a police report and sent that to the original creditor. Okay. So when to seek a credit consultant, someone like me, is if, again, there are collections that can be removed. It's usually more cost and time effective to have me do it for the client versus the client attempting it themselves. And they especially don't want to take the risk of saying the wrong thing. So if they call and they say, you're breaking the law by reporting a Sprint, and the Sprint person on the line says, well, you owe us money, and the client says, well, I know, they just gave admission of guilt. It's just a slip of the tongue, which you don't really want to risk. The other law in Massachusetts is, in order to collect money from someone in our state, that company has to get a license to collect in this state, which is actually very rare, because most companies do not require it. Most states don't require that. So I'm going to give you an example. So, if you look at the top one, yeah, two different ones. Their Portfolio Recovery is a collection company who purchases about 90% of the debts in this state from all creditors. If you look at them, you look down the list of states they are licensed in, they are licensed in Massachusetts. Alright, so they can legally ask for money here. The next page shows LVNB, which as of 2 years ago purchased the other majority of debts. They have no license. They cannot legally take a penny from anybody in the state, but nobody knows that. Nobody knows it is required by law. So these clients, these consumers, they pay it because they get scared or they get threatened or it's on their credit report. So if someone comes to you and says, I have all these collections and I don't know what to do, you can say, well, check the licensing. If there's no licensing, you don't have to pay. That money stays in your pocket.
Don't worry about it.
Okay.
And how does this appear on the
credit report?
On the credit report? If
So,
they're licensed or not?
It doesn't.
It doesn't. Okay.
No, the client actually, they can Google. They can go through a division of banks. They can look up licensing. But if someone says, this company, I don't know them, but they say I owe them money, check them out. Always do your research on anybody who wants a penny from you. In a situation like that, if they say that, I can do that research too. So I can figure out if they're licensed, if they're reporting correctly.
And consulting fee or?
So for the initial analysis, the overview of absolutely everything that's going on, timeline, and to-do list, both what they can do on their own, if they need me, I'd say about 30-40% of the time they don't need me at all. I'm just going to tell them what to do.
Mm-hmm.
I charge $30, and I give them the full write-up and the credit report. So, and one of the things to keep in mind is that you guys are special. You have clients who are ready to buy a house, or think they are. They have a little bit of money, the case may be, but about 50% of people who come to me have nothing.
And you could also give that as a gift to the client to get them going on the right track.
Yes.
Like a
Mm-hmm. Awesome.
And my company offers credit monitoring, financial counseling, budgeting, which is huge. People hear the word budget and they think I have to cut
Well, that's
back.
another tough thing. We were talking before with Sarah about alimony and child support, and that's huge when you're first breaking up and setting up two separate residences and two separate ways of life. You've got all of those extra obligations, and how has all of that affected your credit score? I mean, it's complex.
The average divorced individual who moves out of the main home, their rental is more expensive than their mortgage.
Yes, I know.
Yeah. And then it becomes a huge deal. And one of my jobs is to go through your income and your bank statements and say, oh, you didn't play this game properly. Your insurance, that you got for your rental is actually much higher than your neighbor's. So let's make this phone call and save you a couple $100. One of the main things about budgeting for your clients, or as you as an individual, is to realize that paying more for something doesn't make you like it more. It just means that you paid more when you didn't have to. So you need to learn how to maintain your level of happiness, maintain your lifestyle, and at the same time decrease the amount of stress you have by making sure that this game we play every day, and I mean that in both good and bad ways as a game, make sure you're playing it money-wise correctly.
It's so nice to know that there's a resource.
I'll be filling this room up.
I have no idea how much time I've taken.
We're probably pretty good.
We're good.
Yeah.
Okay. There's a little more on here.
Sure, go ahead.
Okay. Anybody you come across who you know is not going to follow through, send them to me. I will hold them accountable. But that's one of the major things too. You tell your client says, oh, I need 5 more points. And you say, okay, get on it. And they say, oh, yeah, I'll fix it. If you send them to me, I will make sure they are on top of things. They can even put in the contract with you on the contract itself, so you are fully involved with their case. That way, things run a bit more smoothly. As I'm sure you've all found out in life, people lie a lot. So they're going to come to you and say, my credit is bad, but it's my ex's fault. It's my kid's fault. I didn't do it. It's not my fault. The mortgage lender will understand that. No. No. You co-signed or you are the primary. You accepted accountability at that time. You have to live with it. There is no loophole for you because you didn't overcharge the credit card on Thursday.
Or you thought something was discharged off of there and it didn't get properly taken off or followed through.
Yeah, or you co-signed for your son's car and he hasn't paid it for the last 6 months. That is your fault. If you're going to co-sign for somebody, as horrible and blunt as that is to say, you have to stay on top of it. It is your neck on the line. So something like that, I can't fix that. That is up to them to make sure things are paid on time. Judgments. If there is a court order saying you have to pay something, there is no getting out of it. And a lot of people don't understand that. Judgments, for the most part, have been removed from credit reports, but they are public record. The lender will find out, and yes, you do have to pay it unless it's within that year period in which you can appeal. And some of these seem silly, you go off a court order, of course you have to pay it, but you're going to get that question. You're going to get people coming to you and saying, well, it's not me, it's not my problem, I shouldn't have to. Well, you do. The number one thing is student loans. So I'm going to throw some numbers at you guys. You do not need to remember this in any way, shape, or form, but just get the general concept. So when someone comes to you and says, I have $200,000 in student loans, I pay $1,000 a month. All right, which is pretty average. A student loan company, after you graduate, can throw any number they want at you and just say, pay this back. All right, and most people don't know that. What you can do is you can say, what plan are you in? And they're going to say, the standard response is, I have no idea. So what most people should be enrolled in is called the IBR program, which is income-based repayment. Under this program, let's say you make $50,000 a year, the maximum amount you have to pay towards a student loan is $316 a month. Legally, nobody can charge you more than that. So basically what the IBR income-based program states is we're going to look at your income. We're going to minus 150% of the poverty level for your household size. We're going to divide that by 12, and then we are going to take 15% of your disposable income, which at $50,000 a year is $316. If you make $40,000 a year, you don't have to pay more than $191 a month. And this is for a family of 2, not even a larger family.
Oh, even if it's more, have more
If you
siblings or family.
Kids, if you have more kids, then the levels go up. So poverty level at a family size of 2 for 150% is about $25,000. For a family of 4, it's about $38,000. And under this program, not only the amounts become affordable, you can live, you can have a life, you don't have to panic when you don't get extra hours at work. Under this program, you pay for 25 years. And then the rest of your debt is wiped. So people who make minimum wage their entire lives, who went to school, and for whatever reason couldn't get a job, they can pay $5 a month for 25 years and have the debt wiped. If you stick with your original student loan program, again, they can charge you whatever they feel like. It's in the contract, both federal and private. If you owe more than $50,000, you're never going to pay it off. And you're just going to have a hard time living. So if someone has an issue with a student loan or is worried, you can send them to me, and I'll crunch the numbers for them. Or they can research online and look at the different programs. But instead of paying for the next 60, 70 years after graduating, pay as little as you can for 25. And
That's amazing.
maintain that.
Okay.
Okay, and that's it.
Oh,
That's
Casey,
your
thank
number
you
1.
so much for being here. That's amazing information and a great resource for all of our agents.
My pleasure. Hopefully, again, a lot of information.